To get things started with a bang, we have Richard Wawrzyniak, Principal Analyst for Semico Research Corporation. Richard has been involved with the semiconductor industry for over 35 years, serving in various roles including sales, marketing, and even management, and has been a market analyst for over 20 years. It's my pleasure to introduce Richard to share his thoughts on semiconductor market trends, tying it all together for the big picture. Richard.
Well, good morning, everyone. Thank you for coming. Hope everyone's been sufficiently caffeinated so far. Hope I don't put anybody to sleep. And I want to thank the DAC committee for inviting me to give this presentation. Appreciate it. And I think there's a lot in here, so I'm going to go through it reasonably fast. And if you have questions, please feel free to ask them. So, where are we today? I imagine some of you attended the presentation last night talking about trends in the industry. Obviously, we're facing, they're coming off a pretty good growth year last year, about 26% of semiconductor revenue. Good year, good growth year in the EDA market and the IP markets. And all those things are really drive each other. So they're very tightly interrelated and coupled together. But what's happening into the future? Semico believes that for 2022, we're still going to have positive growth. Our latest forecast is about 6.3% increase in semiconductor revenues. But we see a slowdown coming probably next year, 2023. Currently, we're showing it as a minus 0.9% decline. But given the strength, the continuing strength in the market, stay tuned on that. It could flip very easily to positive with just the right set of circumstances. But we are facing a lot of headwinds. War in the Ukraine, disrupting the supply chains and the world energy markets, rising energy costs, affecting market stability. Inflation is starting to rise, interest rates starting to rise, and those are not a set of good conditions that would be conducive to a continued major growth going forward. But on the other hand, interest rates are only about 3.5%, not 10, not 20. So, the impact is being felt, but it's not that dramatic yet. Energy costs, I think, at the moment are more impactful. That impacts everybody directly, right in the pocketbook, every day. And if you have negative perception about things, it influences your decisions about buying, about investing, about the future. And you have to be careful that we don't over stress on this kind of stuff. I realize it's difficult not to when you see the money you're spending on filling up your tank doubled from last year. That's kind of hard to ignore. But the real question is, are these things permanent or are they transitory? Every indication seems to point to the fact that they're transitory. But basically, we're just going to have to hold on and wait and see what happens. One of the positives is demand still continues to be relatively robust. Slowing a little bit in certain areas, but certainly not falling off a cliff. As long as that continues, then you would have to say that the markets will be okay. Maybe flat to slightly down as we showed for 2023, but certainly not a disaster. If that changes, then look out. But it hasn't yet. So, and we're more than halfway through the year, so things would have to worsen quite a bit in the second half to really be turn negative for next year. And personally, I don't think that's going to happen. And in light of all that, we still have a lot of new applications that are emerging have emerged and are starting to ship volume. So as we diversify away from the traditional applications into these more emerging types of applications, that diversification is good. It's a hedge for the market against dramatic changes downward. So the more strength we see in those kinds of things, the better off we're going to be. They may not generally directly contribute massive amounts of revenue, but just the fact that of the diversification allows people to hedge their bets, so to speak, to continue to invest, to continue to take risk, because there's a promise of a payoff fairly quick. If you didn't have those emerging people, if they were just looking at the same old applications all the time and they were starting to decline, then people, I think, would turn much more negative. But that hasn't happened, and I doubt that it will happen. So the real issue to me is the supply chain issues. So why are we having these issues? Well, obviously COVID, the disruptions, and there were, in some areas, definite breaks to the supply chain. But I think more importantly, there was the supply chains became unsettled. So instead of, if you think about the people doing just-in-time inventory, that kind of stuff, one day they got 300 parts and then they got nothing. And the day after they got 500, and the day after they got nothing. And you know, when you set up for just-in-time inventory deliveries, you can't plan on that kind of stuff. You plan for a steady flow of parts that are you can count on. And when you can't count on those anymore, you start making decisions that start rippling throughout the whole supply chain. And that's continuing today. And it's going to take a while for equilibrium and stability to return. Once it does, I think then that's the point where we're going to really know what's the real picture with supply versus demand. How much does the demand outstrip the supply realistically today? Is it a lot? Is it little? Is there actually an oversupply? The oversupply part hasn't happened yet, but I think it's something that's waiting in the wings to see how all these things come together and how it progresses into the future. So that's an area to keep an eye on. So I put a lot of different areas of interest into this presentation because DAC obviously is, all the companies that come to DAC, IP companies, EDA companies, semiconductor companies, systems companies. There's a lot of overlap and a lot of different interest levels in this conference and in the people, in you folks that attend the conference. So I try to touch on a lot of different areas to give a picture of what's happening. So this looks at R&D sales over since 1960 as a percentage of semiconductor sales. And as you can see, out here towards 2016 or 2022, 4, 6, 8, 2030, the numbers are pretty big. And when I researched this, I didn't find any information that told me what the percentage, if any, of government spending was here. So as far as I know, this is just semiconductor R&D. And I suspect you could add probably another 25, 30% possibly for government if those numbers were available. So the reason I put this up here is we're kind of looking at a situation where people are worried about scaling going forward, and silicon is the major vehicle for the semiconductor industry. Is that going to remain true beyond the end of this decade or beyond the next end of the next decade? Possibly. But I suspect that we're going to start investing more heavily into use of different metamaterials into the semiconductor manufacturing flow. If that happens, could we completely abandon silicon? No. and that's the reason why I put this chart together. Collectively over this period of time, it's $8 trillion with a T of R&D spending. That's a big number. Obviously, a lot of that is obsoleted stuff, shuttered, but the industry spent that money at some point in time. So, and if we were going to duplicate this and move away from silicon, we're not spending $8 trillion all at one time, but it would be a hefty amount of money. And so that's something that people have to think about going forward. It's not exactly, you can't just flip a switch and switch over to carbon nanotubes or graphene or those other things. You've got to make sure that you can integrate those into the manufacturing flow sufficiently so that you get a manufacturable product. And that effort is ongoing, and I suspect there's a lot of effort going on at different semiconductor companies, research labs, universities today. That's going to continue. So from the point of view of gauging the interest level in doing those kinds of things, it's high today. So this is our forecast for the semiconductor market going forward. As I said before, good growth year in 2021, slower growth year this year, and then possibly a negative growth year for next year. But then after that, it starts to pick up again. And there's been a lot of talk about the $1 trillion semiconductor market. And I wanted to see, okay, just how realistic is that? So it really all depends on two things. One, if there is a downturn, how deep is it? How long does it last? And when does it occur within this time period? If it occurs fairly soon, next couple years, let's say, and isn't very deep, then it's very possible we could get to $1 trillion. 950, 975, 925, something in that area. If, however, a downturn doesn't occur in the next couple of years, but occurs further out in 2028, 29, depending on how deep it is, you probably can't get there because there's not enough time to recover. Personally, I kind of take it with a grain of salt, those kinds of projections into the future. I mean, we've heard some of these things before, in previous cycles where we're going to get, everything's up and to the right forever, nothing's forever. But on the other hand, it's not going to be a disaster either. It's something that people need to be aware of, be prospective, or have a perspective about what's happening, and for sure, don't stop taking risk. The worst thing we could do is become totally risk adverse, and then that will prolong any kind of downturn. We have to proceed ahead with an eye on the future, even though the present might not be all that palatable. So you can't have a presentation these days without talking about AI. And I wanted to give an idea of what the AI market looks like today. So I did this by the type of function. So in level 1 here, there's supposed to be a handy dandy laser pointer on this thing, but it doesn't work. My apologies. I just listed out different types of efforts. So if you think about it, math, high-level math computations were really the first type of AI. But that's been around for a long, long, long time. And the idea here is taking things that a human can do, human cognition, and translating them into machines, the ability of machines to do. So natural language translation, face recognition, image recognition, pattern recognition, olfactory and chemical analysis, gustatory analysis, those kinds of things, just basic things that the AI can do now because of the advancement in the technology and the coming together of the different algorithms that people have put together. But it's not going to stop there. We're going to start now taking these kinds of things to a level 2, self-learning. We already have some of that. It's adaptive and self-directed. We're already getting to architectures that can do that. The next level beyond that is what I call human-inspired. And this is where you start taking all the effort and the knowledge that's gone before and start turning them into real tangible products that people want today. The one thing that I think should be of an overriding goal for anybody working in AI is you've got to be able to take whatever the AI is doing, whatever functionality you've built in, and be able to demonstrate a tangible benefit to the end user. If you can't do that sufficiently, they aren't going to use the product. It doesn't matter what it does, it doesn't matter what level of functionality or what the cost is, they need a benefit. They need a reason to switch from what the current solution, whatever that is they're using, to the new solution. And people are starting to do that. It's difficult. It takes a really in-depth understanding of not only the application, but your customer. Look through at these things through his eyes and see, okay, what exactly does he need? It isn't a good idea, I've never thought, to tell the customer what he needs. You need to listen to your customers and have them tell you what they need. Because at the end of the day, this industry, the semiconductor industry, the EDA industry, the IP industry, we don't just make products, we're solutions providers. That's basically what we do. We're enablers of others to create products and provide solutions. And if we lose track of that, you kind of stray off the path a little bit, and that's not a good thing. So I think with these level 3 kinds of applications, if you think about all the data that's being created by sensors and in the cloud and all that kind of stuff today at the edge, in the cloud, there's a tsunami of data that's about to descend on everybody's head. If you're going to really be into this stuff, you really want to use these cool kinds of things, how are you going to manage that? I don't know about you. I already have a job. I'm very happy with my job. I don't need another job. And based on how some of these things set up, you're going to be tasked with managing this stuff continuously. And I don't think that's a good solution. It may work for a while, but as the level of data deepens, you're going to quickly run out of time or interest or ability. So I think that's a perfect setup for somebody to create these kinds of applications that will manage some of this data for you, that you would own personally, maybe if the right technology is available, on your cell phone or on your PC or whatever device. And you're going to put a lot of your information, your personal information into this, and it's going to know your likes, your dislikes, your preferences, your predilections, whatever. And it's going to be an intermediary, a mentor, if you will, between you and this massive amount of data that's going to descend, as a way of managing this stuff and taking advantage of it. Again, if you can't take advantage of these things, what good are they? Why will people pay any money for these things? You've got to demonstrate the benefits here. And then finally, a human, what I call humanized, indistinguishable from a human response. People have been speculating about that kind of stuff for years. I saw one presentation from IBM. They were saying it was 50 years out. Anything can happen in 50 years. I have no idea if that's possible or not, or impossible. You hear people talking about the singularity, about Kurzweil and those guys, about the AI apocalypse and the rest of it. If we don't manage this correctly, is that possible? Sure, lots of things are possible. Is it probable? I don't really think so. Lots of different things would have to come together for that to happen, and I really don't think that's going to happen. So that's speculation. That's interesting stuff, sci-fi stuff. I don't think it really has that much of an impact on our industries yet. So, trends in the AI market, major trends. And there's a lot. One thing for sure, the architectures and the algorithms are becoming better defined and refined. So the performance is going up, and the capabilities of these architectures is improving dramatically. That's going to continue. The industry likes to search for a particular architecture, let's say, as the solution. And given the nature of AI and given the nature of the markets that it's going to go into, I don't think that's going to happen, not for a long, long time. Because if you think about the applications that are going to be impacted by AI are so diverse. The way I look at it is, if you go back to, let's say, the beginning of the PC market, there was no ecosystem, there was no software, there was very little, there were, if I remember right, about 15 different 16-bit architectures that could have been chosen to be the winner in the IBM PC, but only one got chosen. Okay, and then Apple chose Motorola for their CPU, and that was it. Basically, everybody else went home. Is that going to happen with AI in the markets today? No. And I think the reason is all these applications today, the ones that had to start and be nourished and evangelized in the PC era, already exist in massive volumes today with multiple solutions from multiple vendors. That wasn't the case back then. So all that evangelizing, all that time, all that effort, all that money, all those companies don't have to occur this time. And given that, I think that's the reason why there won't be one architecture to rule them all, because they're already starting all at the same point. They're all on the same page today. Nobody's got a corner on the market for a good idea today. Everybody's essentially equal, or at least starting equal. As this plays out, will that continue? No. I mean, there will be consolidation, the usual that we see in this market, but that could be 10 years out, much longer period of time. And that gives a lot of opportunity to small startups, somebody with the right idea. They're just as equally as good as a multi-billion-dollar company, because there is no one solution for this yet today. And I think that's very important. I think that's very encouraging, especially if you're a small company today. You don't have to be afraid that the big guys are gonna crush you because they're the big guys. Yeah, big is big, but ideas are better, at least short term. So we're processing a lot of data at the edge, not in the cloud. That's starting. People realize that there's not enough bandwidth to send all that data to the cloud. So the architectures at the edge are being improved. And as part of that improvement, and that the desire to rely less on the cloud architectures, hybrid architectures are starting to emerge in SoCs for edge processing, where it's heavy inference, light training. So you have the ability to change a target in the algorithm without rerunning the whole algorithm. And I think that's going to be very important. That's going to give a shot in the arm to the market. It's more efficient, it's less costly, saves power, gives more opportunity for more solutions, and that's I think beneficial long term for the growth of this market. Another trend that's starting to emerge is people are realizing, okay, I'm doing standard compute things today, and I want to add AI. Okay, do I need 2 chips? Well, you could, but now, depending on the application, do I have the power? Can I tolerate the cost increase? Do I have this physical space? Or is it better to have one chip, one architecture that does both? Standard compute and AI functionality, or AI compute. And I think not every application will require that, but I think a lot will. So if you're developing architectures for AI, I think you need to pay a little bit of attention to say, okay, we can't abandon standard compute types of things completely. Does my architecture, what I'm creating, can it do that? Or because I've favored the AI side so much, have I hamstrung a little bit the standard compute side? I think you need a balance there. And I suspect people will get there. It might take a little bit of time because it's kind of a reversal in thinking if you think about it, because there's so much focus and emphasis on AI. But we're not going to abandon standard compute kinds of applications, and those are going to still be there. I've already talked about the PC market, the AI market like the PC market. There's no evangelizing and no massive ecosystem build out necessary. It already exists. Literally, essentially what we're going to do is take the existing applications, the existing architectures, and add some AI, some level of AI functionality to those. And because of that, the unit volumes can mushroom very quickly. And I think that's a benefit to the market long term. That also is another reason why the IP market is going to continue to grow like a weed. More designs, more complex designs, more IP in each of the designs. So if you think about how the IP market works, you have 2 or 3 different ways of generating revenue. You have licensing, you have of the IP, you have royalties associated with the shipment of the SoCs that use the IP, and you have a services or maintenance business. Realistically, the service part of the IP market is fairly small, 11, 12% a year. That's about it. The major heavy lifting for revenues is in licensing and the royalties. But as the AI applications start shipping in volume, there's more IP in those, going to be more IP in those parts, and that is a synergistic effect on and drives the revenues. And that's why I think the IP market is a reasonably good place to be. And also, as I said before, the service provider, the solutions provider, has to adequately demonstrate a tangible benefit to the end user, otherwise there's no reason for them to switch. And I think people are realizing that, are going to focus on that in the future. So this is looking at SoC design complexity, or device complexity, I should say. And as you can see, if you could see our handy dandy laser pointer here, this is arranged by 3 different types of SoC. Semico tracks 3 different types of SoC architectures: an advanced part, a value part, or mid-range, and a basic part. And I have a definition of that coming up, so I wanted everybody to understand how we place these things. As you can see, the advanced parts, which is the blue line there, is going up dramatically. And that, if you think about it, that's happening. Accelerators for cloud, for AI, for data center, for GPUs, things of that sort are very complex parts. And the gate densities on those are pretty big. The value parts are kind of in the mid-range. There's a trade-off there between cost and performance. So they fill a niche, if you will, across the broad spectrum of applications. They're basically found in pretty much everywhere. And the basic SoCs that's the green bars, which are very small in terms of complexity, but the number of design starts for those kinds of parts is growing, mostly driven by IoT, factory floor, factory automation, those kinds of things. Those parts are perfect for that. They also are going to get AI functionality incorporated. So again, you have this kind of synergistic effect going on where one type of architecture reinforces the other, and the net effect is that the whole thing, if you think about it, is being lifted up. as far as the complexity levels go. That's not going to change anytime soon. We heard last night about the end of scaling or scaling slowing down. That may or may not be true, but certainly the desire or the need to increase the complexity levels of the parts that are being designed isn't going away. Because at the end of the day, do people design parts because of a certain way because of the cost of the transistors went up? Or do they design the parts to meet market requirements? I think they design the parts to meet the market requirements, and if the cost of the transistors goes up, well, oh well. That's not desirable, but it's not the end of the world either. If you don't build a part to meet the market requirements, essentially you built a boat anchor, and I don't think people are going to do that. And this kind of reflects that thinking. So here's a definition for SoCs, and I wanted to put a paper definition in place so that people understand, how do these things play out. And to Semico, the real secret sauce here, if you want to call it secret sauce, is the SoCs are, it's not the silicon, it's the methodology that's used to create the silicon. That's, to us, what defines the different types of SoCs. Let's say it differentiates it from a standard cell design or part versus an SoC. And the main driver here is the use of IP, whether it was created internally for reuse or sourced out of the third-party market. That's the differentiator. And in looking at that and looking at the different architectures that people were building, I realized that it was possible to differentiate the different types, the complexity levels by the types of and the amount of IP that's being used. So I went about and created a definition that focused on that. And as AI has come out and now becoming a driver, it made sense to extend that to now look at the different types of AI functionality that would be on the 3 different types of SoCs. Just as a way of kind of placing things. And I have to say that I don't consider these to be hard and fast definitions. I mean, there's an overlap. It really depends on what do I need for the application, what's my customer telling me, what's the competition doing, what does it take to solve the problem. And when you look at it that way, sure, you could have a part that's got 500 IP blocks on it, or 1,000, or 50, and still be a complex part or not. It really depends on what you're trying to do and what problem are you trying to solve. So I don't look at these as hard and fast definitions. It's more of a guideline, a guidepost, if you will, a ruler that you can use to apply. So why would you want to do that? Well, so I look at lots of designs, reference designs, block diagrams, till my eyes bleed for different projects, for different customers. And having something like this allows me to help place where these things are relative to each other. So if you were doing a competitive analysis of a customer, your customer or your competition, you could use something like this to figure out, okay, where do I sit in relation to that customer or that competitor. Fairly useful from that point of view. Probably a little esoteric, but okay, this is the semiconductor industry. We love esoteric. That's the name of the game here. So, strength in the EDA market. Just so you know, Semico doesn't really cover the EDA market that closely. Cover the IP market, yes, but not the EDA market. So I looked at the current trends, looked at what people were saying, and kind of put this together more to show what the trend line is rather than focus on the individual specific numbers. The IP numbers, yeah, those are solid numbers, I think. The other numbers are, I think, more of a, just to give a flavor. So I wouldn't run to the bank with any of the EDA numbers that I'm showing here. You could run to the bank with the IP number. And as you can see, there's a steady growth, increase over time in the market numbers, and I think that's beneficial. That's good. The big three EDA companies, Cadence, Siemens, Synopsys, are all IP vendors and are starting to get major amounts of their revenue from the IP market. Again, I think that's beneficial. There's a synergistic effect between creating the tools and creating the IP or having the IP that the tools use. It's good for, I think, the market. It's good for designers, and I think that trend is going to continue. Are other EDA companies, some of the smaller companies, going to become IP vendors? That I don't know. Although the barriers to enter the IP market are fairly low, you have to have some expertise. You have to know what you're doing. And at the moment, there's rough estimates, 700 IP companies at least. There certainly aren't 700 EDA companies. So it's possible that some of the smaller EDA companies will decide to become IP vendors, but I would say that's an ongoing process. So if you're dealing with companies like that in your job as a designer or a manager of designers, you probably want to ask the question every once in a while: Are you thinking about getting into the IP market? What IP would you do? Those kinds of things. I suspect those are ongoing conversations, but probably important conversations to have. So the long-term trend here, I think, is there's a slow diversification away, maybe I shouldn't say away, to incorporate new types of areas for EDA beyond just the traditional, let's design a new part. Is that, I think there's some reluctance to do that, because you got a good thing. Why screw with it? Why risk doing something that's not going to work? Well, people are talking about downturns. That's not new. I mean, that's anybody that's been in the industry for a while. That's a fact of life that those occur. So why would you take a risk and diversify completely away, or not completely, but away from the traditional EDA type of market? Well, diversification is good. It's a hedge against possible reductions in revenue. What's really required is the expertise. You need to understand the application. You need to understand those markets. So if let's say, for example, we're thinking about designing tools to help farmers, or agriculture, or factory floor, or drug discovery, or genomics, or aerospace, or any of the multitude of different areas where tools like the EDA industry creates could be used. You can't just go willy-nilly and bolt stuff on and figure that people are going to use it and it's going to work. You have to understand the application. You have to understand the markets. All those interactions. Everything that you understand today with your customers doing design has to be understood for all those new areas and what they do. That takes time, it takes people, it takes money, and at the moment, why mess with a good thing? But if, as people say, the storm clouds are gathering, it might not be a bad idea to look at some of that stuff for the future. Just just thinking about the use of metamaterials in the manufacturing flow for semiconductors. how exactly are designers that have no experience with boron nitride or molybdenum disulfide, say that 5 times fast, or graphene or carbon nanotubes, how are they going to design with those metamaterials? They have no experience, no expertise. Where are they going to get that? They're going to get that from the EDA vendors, from the tool vendors. That's where it has to come from. Where you know, essentially that kind of expertise has always come from when we move into new areas. And I don't think metamaterials are only going to be relegated solely to semiconductor manufacturing. They could be employed literally anywhere. So if you start developing the tools to help manage and manipulate those kinds of materials in the semiconductor design flow, I suspect you probably can do the same for all those other industries that are going to use metamaterials too. And that could represent a huge opportunity. But again, you have to get it a little bit outside your comfort zone, and sit back and say, okay, what do I want to be? I know what I am today. What do I want to be tomorrow? Who do I want to be tomorrow? Do I want to be just in the semiconductor industry, or do I want to? I have something good. Do I want to extend it to other industries and make it available to other non-semiconductor kinds of applications? I think that's probably not a bad idea, frankly. I think that represents a good opportunity for the market going forward. So, SoC market. This is unit volumes in millions of units, and as you can see, fairly good growth. And I think the growth is going to continue. It's probably, I would say it's growing so fast I probably undercounted it here a little bit, but not dramatically. And again, it goes back to what I was saying before about royalty revenues for IP. Also design starts and tools. People need tools to do the designs. More designs occurring and are going to start occurring at the lower process geometries. You're going to need new tools, more revenue, synergistic effect. That's going to continue. Another reason why the revenues are going up, rise in the number of IP blocks per design. And as you can see, we're starting to get to 400, 500, 600 on a very complex part. And just as a note, I'm counting everything that's on there. Even if it's been reused, if it's been hanging around for 10 years, if it was the IP block that you used, I'm trying to count it. Oops. State machines, every 4-bit micro you might have thrown in there. I'm trying to count all of those. Obviously, that's a Herculean task. I would never tell you that I can count all that stuff accurately. Nobody can. But I'm trying to give a perspective on what the trend line is here and what you might find. Is it possible to do a complex design with less than 100 IP blocks? Sure. Do you want to expend a lot of effort and money to do that? You can. Or you could rely on the IP blocks that have already been created in the third-party market and potentially lower your area of difficulty, of expenditure of effort. That's the value proposition for IP. Essentially, you're buying little bits of intellectual property or experience, knowledge, expertise frozen in time. That's the IP market, essentially. Why not take advantage of it? And as you can see, people are taking a lot of advantage of it. The problem here is that, as you can see with the blue line, over time, the cost represented by the IP of the total design effort is rising. And that's not necessarily reflected only because the IP is becoming more expensive, which in some cases it is. It's just because more and more IP is being used. So there's two effects there. I don't think that's a bad thing, but you've got to watch a little bit what those costs are. You don't want to get them, let them get too far out of whack. I think people do a very good job of managing that, but again, it's something to keep your eye on for the future. So try to give a sense of what the revenues are. Some people will say that these are too high, some people will say they're too low. Like I said before, there's over 700 and counting companies in the IP market. It's impossible to talk to all of them. So there's some modeling going on here. I try to look at the major guys, the publicly traded guys, and all the companies that are not publicly traded but have a significant impact or footprint in the market to form a picture. The picture is it's going up. It's increasing over time. Not going to change. You'd have to have, the only time this really changed was in the 2008-2009 downturn, where you had actual physical destruction of end unit demand. Then it went down. Also, a lot of designs that were in progress got suspended or canceled. So those revenues from licensing were, kind of flatlined. And as the unit volumes didn't materialize because the actual end application disappeared, the royalties flatlined. But other than that, other than an event like that, it's difficult to see how the market for IP is not going to continue to grow over time. And the other interesting thing here, and that's why I put this line on here, new types of IP are emerging all the time. So if you think about it, what is the IP market? Well, if you've ever seen the SIA Blue Book that's published every month by the Semiconductor Industry Association, they have a whole long list of functions that are in there. So when the IP market got started, but those are all discrete functions. When the IP market got started and really got rolling, what did people do? What did designers want? Well, they wanted the functionality, but they wanted a way to put that functionality into the SoC they were designing, hence IP. So at that point, the IP market mirrored almost exactly the functionality that was encapsulated or depicted in the SIA Blue Book. But that was 20 years ago. Now, today, you see types of IP that are emerging that have never existed before as discrete functions. Embedded analytics is one of those. That's something that's emerging now. There's 3 companies that I'm aware of that are heavily invested in that today. Mentor acquired Ultra SoC and then was acquired by Siemens. The Ultra SoC really was the first company there, IP company that was doing embedded analytics. Synopsys has now entered the market, and now an Israeli company, Protean Techs, has also entered the market, and they all have very good stuff. And if you think about the slide I had there talking about complexity levels, how exactly are we going to manage these complexity levels going forward? If there's not going to be any cessation in the rise of complexity levels based on gate counts or gate densities, how are you going to manage that? How do you manage 100 billion gates on a part? It's not going to be easy. You need a way of doing that. You need a way of not only managing it, but controlling it and commanding it. And this embedded analytics trend is one of the ways to do that. Because the hooks, if you will, are embedded right into the silicon and can provide real-time data back to the designers or to the customer. In terms of predictive maintenance types of operations or monetizing the data flow back to the customer. Think about the hyperscalers or those service providers. One of the reasons why they can charge the money they do is a guarantee of uptime. If you can provide the better uptime, to your customer, you can probably charge more money for it. If that starts going down, the uptime starts going down, you're probably not going to be able to command those kinds of revenues. So a way of doing predictive maintenance on silicon right in the field in real time probably isn't a bad thing to do. And I think a lot of people are going to take advantage of this going forward. So I wanted to also look at the CPU IP market, which there's a lot of interest in RISC-V today. RISC-V is certainly gaining a lot of momentum as becoming a real player, but of course it's starting from a very small base. ARM is still going to be the largest CPU IP vendor for quite a while, but if you take a look at the RISC-V CPU IP line revenues, not bad. There's growth there. There's activity. There's momentum. A tremendous amount of activities happening there, and I think that's only going to increase for the future. So that's again as an indicator of the relative health of the markets or the industry. I think this is a good thing. If the markets weren't healthy or weren't attractive, you wouldn't see these kinds of things happening. People would be doing something else. But there's a tremendous potential for increase in revenue and diversity of solutions, and that's a sign of a robust market and a robust industry. So this is a plot of how Semico tracks the IP market, and this is it's an eye chart. I apologize for that, but there's 12 or 13 different categories that I track, and this is a depiction of those by size, by quarter from the first quarter of 2006 out to fourth quarter 2025. And as you can see, if you could actually read this from back there, the CPU market is the largest market and this is for royalty revenues. And then memory, graphics, GPU, and interface are the other major components for the IP market here for royalties. Design costs. We talk a lot about design costs. They're going up. And as you can see from this kind of chart, back at the 28 nanometer, silicon and software design costs were about equal. And then as we've proceeded down the geometry curve, software now is assuming a major, the majority cost driver. So there's a few reasons for that. On complex parts, you could have more than one operating system. You could have several hypervisors on there. You could have 10 or more ISAs on the same part. And it doesn't sound like much to say, oh yeah, we've had more than one ISA, but you need people that understand those instruction sets and can write for the code for those, and that adds to the cost. It adds to the complexity. It adds to the timelines, the design cycle time. And that's another major reason why the costs, the software costs, design costs are going up. Plus, as the complexity levels of the parts themselves go up, you want to take advantage of that and write code that allows you to take advantage of the performance you've designed into the part. There's a cost for that. And that's part of the reason why these costs are going up. On the silicon side, at the lower geometries, there's many an increase in design rules. I had a chart that showed that. This presentation was getting kind of long. I didn't want to go too much further on that. But 12, 14, 15, 20,000 design rules for a process geometry. It takes a lot of people and a lot of time to understand that, so that when you design the part for a particular foundry's process, it's going to work. You don't want to design it and not have it work. And that's going to cost. That's another driver for these costs. looking at this a different way, I wanted to see, okay, we hear, if you just looked at the previous slide and saw those numbers, you go, oh my God, I can never design a part at 7 nanometer or 5 nanometer or whatever. And if those costs stayed the same year after year after year, you'd be right. But they don't stay the same. So after the initial introduction, these numbers look at the costs 1 year after the initial introduction of the design rules. And as you can see, there's a continual decline in those costs. If you wait 2 years, it's about 50% from when it was initially introduced. Now, obviously, you may not be able to wait the 2 years. Depends on what you're doing and what your competition is doing, or what your customers are telling you. But the point of looking at it this way is that it's possible for even small companies to design at these advanced geometries if you think about it the right way, you plan it out the right way, and approach a realistic view of what you're trying to accomplish. The other interesting thing here is that for the older geometries, when you get out into the like the 20th year, the 25th year, or whatever, the costs flatline. They really don't go down anymore. They don't increase. Now you've got all the tools, you've got all the IP. It's the labor costs that are going to drive the ultimate cost of those designs, and they can be, what is a 250 nanometer design cost? Next to nothing. Not to say that you want to do a design at 250 nanometer, but if you had to, you're not going to spend millions of dollars on that. It's probably way less than $1 million. So it's something that affects all these geometries given enough time, out into the right here. And that is something you can probably plan on. The real question is, do I meet that? Does that point in time occur when I need it to occur? That's the question. It may not, or it might. So what's the big picture here? We've got negatives that we've talked about. Less market visibility going forward, tightening economic conditions, a general feeling of unease in the economy. But you've got positives too. Relatively strong market demand, emerging applications starting to gain traction. So what groups of these forces are going to prevail going forward? And now, this is a little bit speculative. I'm not a touchy-feely. The people that know me know I'm not a touchy-feely kind of guy. I like to deal in the numbers, in reality. The thing that we have to do, continually demonstrate value add to the customer, above all. If you can't do that, why does he want to talk to you? You need to keep your minds open to new possibilities. Even if things are deteriorating, the sun's going to come up tomorrow, hopefully. There is a vanishingly small statistical probability that it won't, but probably not going to happen for about 4 or 5 billion years. I don't know about you. I plan on being around to see that. But realism has to temper everything you do. That doesn't mean optimism is out the door or out the window, but you got to be a little bit realistic. You got to pay the light bills. At the end of the day, that's what you have to do, and you have to do things that can enable that. And a flyer on something, blue sky, might work, but if it were me, I think I'd need a little bit more information, a little bit more data to actually point me in one of those kind of directions. There's plenty of things to do that don't require that. Plenty of applications, plenty of, I remember hearing at different conferences over the years, people asking about what's the next killer app? Well, they're all around you. They're already here. It's just that, If you're looking for an application to come along to save us, well, I think that's the wrong approach. To me, it comes down to this. Do you want to drive or do you want to be driven? If you're looking for the next killer app to save you, you're looking to be driven. Go out and create the next killer app. It's not impossible, it's happened. You just need to be circumspect in what you do, and you need to be really focused on, okay, what are we trying to do here? What do I want to do? What do I have to do to make this work? Which other companies do I have to get involved? It's certainly possible, not impossible. And yes, I know economic conditions might be deteriorating or start to. So what? It's not like this is the first time this has happened. And to be really honest, it hasn't happened yet. We're all talking about it. Are we talking ourselves into it? Well, hopefully not. Hopefully we're smarter than that. Hopefully you're smarter than that. I think you are. But collectively, what's the old saying? Individually, people are very smart. Collectively, they're very dumb. Let's not be dumb, please. So, and that really is the last line here. Be smart and proactive. Take not counsel of your fears, because that's all they are. They might be real, but I think you have the tools and the ability to fight them off. You need to be smart. And that really is my presentation for today. Thank you.